Hello guys, you're welcome to my channel. You're welcome to this channel, and today we're going to be talking about trading prop firm accounts versus trading personal cash, right? So today's topic is trading for prop firms versus trading your own personal account. But before starting on today's topic, I'm currently on tour, guys. I'm currently touring 4 states for just 1 month. We're going to be touring 4 states and then just bringing Forex to people, right? Because where I'm from Nigeria, and right now, people are not too acceptable to learning online, right? They haven't really accepted coming into learning online. They still believe in one-on-one mentorship, right? So the aim is to take Forex to people, educating them and letting them know that you can actually make money and trade from wherever you are, and then that trading is not as easy, it's not as difficult as it seems. Does not mean that it is easy, right? But then the aim is to let them know what can be achieved through Forex, right? So I have interest in about 4 states, and then we're going to be touring these states into next year. So guys, back to today's topic. I'm going to be talking about trading prop firms versus trading personal cash. Now, what are prop firms? For those that are new, prop firms are companies that fund talented traders, right? Back then, what forex traders usually do is they try to raise funds by collecting money to trade for people, right? So they go around, collect money, promise you ROI, right? But right now, you don't even have to do that as a forex trader to get capital. If you know you're a good forex trader, you're a disciplined trader, then there are lots of prop firms out there. The best being FTMO, my forex funds, they're all out there for you, right? Now, getting an account from these prop firms, it's kind of easy, right? There are accounts ranging from $50, but then you have to go through the evaluation, right? You have to go through their evaluation phase and then prove to them that yes, you are a disciplined trader. You have to prove to them that you can do this, right? So they will give you a two-step evaluation. The first step is for you to raise your account into 8%, right? They just need you to raise your account into 8%, and then you are done with phase one of the evaluation. Now, phase two, what they need you to do is just to take your account into 5%, right? So for instance, let's say you have a $10,000 account, you just need to raise it into 8% for phase one, and then take it into 5% for phase two, and you are done with the evaluation, and then you have a live account that is yours to make profit from, right? So guys, it sounds very easy, yeah? But then remember that you are trading large capital, so there are rules and regulations, that terms and conditions that are attached to this account. For instance, now you have a minimum drawdown, right? Now you're taking these accounts, they'll tell you that okay, you cannot go below 10% of these accounts, right? If you go below 10% of this account, it means that this partnership is not working, and then you're going to lose the account, right? Now remember that before you got this account, you had to pay a little stipend, right? So you don't want to break any of these rules, because it means that you have to go and start buying these accounts all over again, and then starting phase one, phase two evaluation, right? But then trading prop firms is actually a very nice, sweet process if you're a disciplined trader, right? So as you all know, I stopped trading my prop firm account on, I think, on the 24th, just before going into Christmas. I closed trading for the year, right? And we closed in good, significant profits, right? So guys, I'm also going to be telling you about trading personal accounts, right? On my Profem account, I do not trade more than 0.5% of my account at a time, right? uh Proper risk management tells you to trade using 1 or 2%. I use 0.5%. Why? Because I trade my prop firm account very conservatively, right? Very, very conservatively. You can see this setup that I have on my screen. I caught this while I was on mentorship yesterday. Now, as you can see, this setup, this is a 1 to 5 risk to reward. Now, what this simply means is that if I'm trading this setup on my prop firm account and then I trade this setup with 0.5% of my account, this enables me to make about 2.5% of my account using just one setup, right? So can you see now that trading prop firms is not as difficult as it seems, right? That 8%, I just need to trade these about catch setups like this about 3-4 times in a month, and then I'm up 8%, right? So trading prop firms is the way to go, guys. Going into 2023, I plan on picking up $100,000 my Forex funds account, and then we're all going to trade it together. I'm going to document the journey, and then we're all just going to have fun trading that account, right? So that is a challenge that we're going to be on. But remember, guys, I'm on tour, so I may not pick up that account yet until February, because I'm currently on tour, and then the tour is going to be for 1 month. So we're going to be done on the 31st of January, hopefully. So we'll go back into trading prop firm accounts, I think, by February, guys. So that's what we're on. That's what we're on. And then right now, I'm also going to talk about trading your personal funds, because that's what I am actually doing right now, right? I'm back into trading my Nigerian account because it's actually fun, and then it's easier for me to express and then tell people what you can make through Forex, right? By showing them in Naira as compared to US dollar. So guys, trading your personal account, right? Let's assume that you fund the $500 into your account and you want to use proper risk management. It means that you have to use 1% of $500, right? So it's trading personal accounts. Most times we over leverage, right? Like I myself, most times I try to flip my personal account, then pull out profit. That means that sometimes I expose as high as 30% on that account, right? Sometimes I even expose as high as 50%. Now, you can't do that on a prop firm account, right? So I trade my prop firm account very conservatively while I come in to trade my personal account aggressively, guys. So that's the difference between trading prop firms and trading personal accounts. However, if you have good funds, right, you can choose to fund. For instance, if you have a $10,000 cash, you can fund it into your account and then trade it conservatively using proper risk management, right? But what most traders do right now, we go get funded. You get funded and then you trade these accounts, you split profits. Now, profit splits, the way it's done, when you've passed your phase one and your phase two, whatever you make on that account, you don't have any restriction, you don't have any assigned target on that account, right? After passing your phase one 8% and passing your phase two 5%, the account becomes yours to make money from. So if at the end of the next month you made about say 10% from that account, the prop firm keeps 25% and then pays you 75% of your profit split, right? So that's how prop firm works, and then that's how the share profits. And the good thing about it is if at the end of the quarter, that's the first 4 months, you consistently hit 10% of your account, they'll scale you up, right? They'll give you an additional 30% of your capital. So if for instance you're using $100,000 account, they'll give you $130,000 account at the end of a quarter, right? Which is the first 4 months of your consistency, guys. So that's how we trade prop firms, and that's how we trade personal cash. So guys, as I said earlier, I got this set up with my team I was on tour yesterday when this setup played out, and then I'm just going to talk a little bit about this setup and then how we were able to catch this setup. If you've not watched my video on key psychological level, you can check it out to give you a deeper insight on how key psychological levels work, right? Because as you can see here, I got this setup on key psychological level of 1.2020500. So I'm just going to do a little bit of analysis, my thought process and all of that before catching this setup, right? So let's go into the chart, guys. So guys, as you can see here, just using pure price action, right? Let's just use pure price action to catch this setup. As you can see here, price was on a downtrend, right? Giving us lower highs and lower lows. Price was just trending to the downside, right? Now that is very easy to spot out. Price was on a downtrend. From the downtrend, price broke out of structure. From the downtrend, price broke out of structure to the top, right? You know there's a key psychological level, which is this line we have on our chart as 1.20500. So all the while, all I was doing was observing the movement of price, right? So it broke out of this key psychological level, also broke out of structure. Remember that initially price was on a downtrend. After breaking out of structure, price pulled back and broke that key psychological level again, right? Signifying that the sellers are getting stronger in the market, right? You can see that it broke out of structure. Instead of it to start creating higher highs and higher lows, right, going into an uptrend, price pulled back into where it broke out from, giving you what we refer to here as a fake out, right? Upon spotting that, all I needed now was confirmation, right, to tell me that the sellers have taken control of this market again. Remember, price broke structure and went up, right? It means that here buyers took control of the market, and then here sellers took back control of the market. So I just needed confirmation to say that okay, the sellers have truly taken over control of the market, and then I want to swim along with the trend of the market, right? I want to swim along with the sellers, right? So upon price coming into this position, it broke out of that key psychological level, right? And then broke back into that key psychological level. Now I would have been interested in taking a trade setup here, but then why I paused was because we got a breakout that occurred with the body, right? Let me just clean this up. We got a breakout that happened with the body, right? So price broke out of this key psychological level. As you can see here, it broke out with body, not just weak. So I was cautious there, and then I had to chill for a bit, right? And then you can see what happened. Price pulled back, right? Pulled back a bit and then went back into this key psychological level to test it. Perfect entry, perfect timing, right? It just went into that key psychological level here where we have my entry there, and I was just watching out and trying to observe what price was going to do there. And as you can see, the candle closed with the body just below the key psychological level, right? It closed with the body just below that key psychological level. Let me zoom this out for you to see. Can you see that the body closed just this candle here? The body closed just below this key psychological level. Can you see that? So giving us a long wick, right? Giving us a long wick rejection. Upon spotting that, I just waited for the next candle to form, which was this, right? Upon spotting this candle formation and then almost closing below this, when price came as high as here and then pushed back, I entered this trade at 1.20524. So I caught it at a very good distance, and then I entered for a sell. And then good thing I was on mentorship, right? I was actually on a private lesson when it happened, so it was an amazing one. I made money on my personal account, and then it was also amazing for the people around me to see it play out live, right? So it was actually a fun trade. As you can see, this setup is a 1 to 5 risk to reward. So my advice to new traders is getting a prop firm account, right? If you want my mentorship, yeah, if you want to be one of my mentees, we have a platform, right? Paid mentorship. When you are done learning with us, we can help you get funded as a funded trader, right? A part of your registration fee will be kept aside for this purpose of buying a prop firm account for you, so that you can practice proper risk management as against trading your personal fund, right? You can have a prop firm account, and then you can also have your own personal funds that you may be flipping and be trading aggressively, right? While you are sticking to trading your prop firm account very conservatively. So guys, as you can see here, this is a 1 to 5 setup. We cut the sell, right? uh, I pulled out of the trade when I hit my target, because I have a certain amount I want to take out of the market on a daily basis. So I took out my profit, you know, but it gave us clearly a 1 to about 5-6% on this trade, right? So if you are trading this setup on your profit account and you're risking 1%, you're going to be making about 5% of your profit account in one trade, right? So guys, today's video is just about how to trade your prop firm account. It's just about how to trade your prop firm account and trading your personal funds, right? So if you're interested in my mentorship, kindly send me a message and I'll just get back to you immediately. Don't forget to like and subscribe on this channel to get notified when we drop new content, guys. So I'm currently on tour, but then I'll be putting in the work to drop insightful content here on YouTube, so you can always come back to watch more videos. Thank you for your time, and guys, I look forward to seeing you next time.